Hey STRU friends, this is your personal invitation to co-invest alongside me. If you haven't heard, I've launched Stomp Capital Short-Term Rental Opportunities Fund, where I will be personally investing all of my short-term rentals going forward. And if you're an accredited investor and you want instant diversification and you want to participate in the best ideas that I identify, you relate to all of my teachings and the uniqueness and the sense of place and all of that stuff, then please click on the description below and find out more about Stomp Capital short-term rental opportunities. The best is yet to come and we're literally getting started. I would love to have you alongside, so let's go. Hey YouTube, what's happening? It's Richard, founder of STRU and professional fund manager. And today's video is a little bit different. We're going to peek into the future and I'm going to share with you what I see happening in the short-term rental space, specifically who the new entrants are, at what speed, at what pace, and what you can do to protect yourself. So here's the basic premise. There's a lot of money attracted to the short-term rental space because the yield is so much better than the alternatives. In fact, I recently had a one-on-one call. An entrepreneur called me. They had a $35 million exit from a commercial place. The cap rate got compressed. It was a good time to sell. The yield wasn't there. They took a look at all the different real estate opportunities and asset classes and sectors and so on, and ultimately chanced on short-term rentals, purchased one or two, got their feet wet, and they had remarkable results, so much so that they found Short-Term Rental University YouTube channel, clicked on the one-on-one consultation, and then spoke with me. And their plan right now is to take all of that $35 million, use some modest leverage, and have about $100 million of exposure into the short-term rental asset class, because in their own words, they can't believe the returns that they were generating. They wanted to know if it was a fluke and how to do it properly. And ultimately, this individual is going to be in the short-term rental cohort-based class to learn about STR 3.0 and how to position themselves properly and how to build this diversified portfolio. So if you'd like to join him and me and other entrepreneurs in that class, join the waitlist by clicking in the description below. But these are sub-institutional asset classes, right? Then there's also me. I've started Stomp Capital Short-Term Rental Opportunities Fund, which is a crowd-funded investment vehicle. I'm taking my money and accredited investors and we're pooling all of our resources and I'm buying all the best locations, all the best properties. I'm building, I'm doing whatever I can to create a world-class portfolio of diversified short-term rental assets. Now, I'm the first to do that as far as I know. But I guarantee you this, I am not the last. There will be many of other people who see what I've done and say, wow, that's remarkable, that's spectacular, I should do that too. And so I know definitively that there will be other short-term rental opportunity funds created behind me. I don't think they're gonna, whatever. But the point is, they're coming, right? Like I know that, and you know it too. So the real question is, what about the bigger institutional players? As you know, I used to work for the Blackstone Group and Ramius Capital Group hedge funds, and they have really smart people investing in the best asset classes. I filmed an earlier video today where Jonathan Gray, the president or CEO of Blackstone, talked about thematic investing. They start with the right sector, the right asset class. Well, what we see these people doing right now is buying 1 out of 5 single-family homes is bought by institutional investors for long-term rentals. That's 12 months or more. So the Blackstone Group has bought $5 or $6 billion worth of single-family homes. They've partnered with Pulte to build billions of dollars of brand new development for long-term rentals, single-family homes for long-term rentals. KKR has spent billions of dollars, and every other private equity company is doing the same, and this is just the beginning. So what we see is in a need for yield, as a reach for yield, they're investing in new emerging asset classes like single-family homes, and they are one decision away from being in the short-term rental market. There's nothing stopping them from saying, I'm not going to sign a 12-month lease on this single-family home. I'm going to go short-term rental. And whether they do it on Airbnb or Vrbo or their own direct booking doesn't really matter. The point is, there's now 1 out of 5 homes owned by institutions that one decision away could be in the short-term rental market. I don't know how long that will take, but I am fully confident, 100% conviction that we will see these institutional players in the short-term rental market. Now all of a sudden, instead of competing with Richard and Erica or Tom and Josephine, you're competing with Black and Stone or K and R. And these institutional players have very deep pockets, incredible resources, incredible skills at running businesses and property management and all of that. They're already doing this with thousands, tens of thousands of single-family homes. What makes you think that they're not going to discover short-term rentals and the same upside that you discovered and I discovered and that we've been sharing here on this channel? They will find that they will double or triple their income using short-term rentals versus signing traditional 12-month leases. And once they discover that and that light bulb goes on, you better believe they're going to do more of it and faster and quicker. So what's one to do? Position yourself intelligently. Know that that's coming. Take advantage of that. Find the right assets, the right locations, the right properties. Add some bespoke hospitality to it. Again, everything we teach in the cohort-based class, click in the description if you want to learn specifically how to do it, but position yourself intelligently, create your moat, and make it so that the institutions that want to scale and really enter this space want your portfolio. Don't compete against them. What's that old adage? Like, if you can't beat them, join them. Well, right now we can beat them. We can front run them. We're ahead of them. We know things that they don't know. They're not in the space. So front run them. And then if they make you an irresistible offer and you can't possibly refuse it, sell at a premium. That's the opportunity. I hope you found this video helpful. Please like the video and subscribe to the channel and comment below. What do you see? What's the pace of adoption of institutional money? Are you seeing more and more people coming into this space that are doing it in size and scale? And how are you positioning yourself to take advantage of it? I'm really curious. I'd love to know. Thank you very much and have a great day. Hey STRU friends, this is your personal invitation to co-invest alongside me. If you haven't heard, I've launched Stomp Capital Short-Term Rental Opportunities Fund, where I will be personally investing all of my short-term rentals going forward. And if you're an accredited investor and you want instant diversification and you want to participate in the best ideas that I identify, you relate to all of my teachings and the uniqueness and the sense of place and all of that stuff, then please click on the description below and find out more about Stomp Capital Short-Term Rental Opportunities. The best is yet to come and we're literally getting started. I would love to have you alongside, so let's go.